is that there's been this ongoing push by different participants, and especially on the mining side, to have silver declared as a strategic metal by various governments, especially in the West. A lot of silver goes into military applications. Silver still is a monetary metal. The thing is that it is less of a monetary metal, and gold is almost exclusively a monetary metal. Something like less than 10% of gold is used for different kinds of things that are what you would consider non-monetary, things that are, let's say, industrial type of applications. Instead, for silver, it's a much higher percentage. 10 years ago, about half of silver was used in industry, and that has actually become closer to about 60% in recent years from about a decade ago. So as time has moved on, as I say, in the last 10 years, more and more silver is consumed by industry, and less of it is so-called available for investment purposes. Think about why that is. One of the important things that we've seen is solar has become so important in the demand for silver, to the point where now it consumes almost 25% of the annual mine supply of silver, which is about 85% of all of the silver that we have available every year comes from mining, and more than a quarter of it goes to just that one application. It's incredible how much silver solar actually soaks up today. So if you think about how the silver market has changed, where about, as I say, 10 years ago, half was industrial consumption. And I like to combine things like silver bullion, coins and bars, things like silver jewelry and silverware. And I combine those together to simplify how I look at the market. And that, for me, makes up mostly the other half of silver demand. Well, today that has shrunk to, as I say, about 40% of the silver market, with the rest being industrial. What's interesting is that what we do know about silver investment, in other words, the monetary side, is that it ebbs and flows. And right now, I think for a little while, it's been ebbing. When it flows and it comes back in a really strong way, that's what really, really drives volatility, especially upside volatility. And here's something interesting to consider, is that we've gone from maybe 10 years ago, 50% of silver going to investment demand. Today, because industrial now takes about 60%, that leaves about 40% for investment demand. So think about when that demand starts to come back in a very big way, that now leaves a smaller portion of the overall silver supply every year to go to meet that investment demand. And that's what I think a lot of the market is missing. When that demand comes back in a big way for people who say, I need to get my hands on some physical silver, there will now be less available each year. And that'll help drive the price up higher and faster. Yeah, so that's an interesting question. I mean, a long time ago, silver was used as money. Perhaps I shouldn't say a long time ago. Up until about the 1970s, many nations were still using silver in their coinage. So technically, in that sense, it was money until 50 years ago, late 60s, 1970s or so. But most central banks did not sit on large supplies of silver the way that they do gold. It is a lot bulkier for the same value as gold. And you need so much more silver to represent the same value in gold. I honestly do not see any kind of reasonable argument for silver to become some kind of a central bank reserve asset. That being said, Russia last fall did say that they were going to start to add silver to their reserves, along with, I believe it was platinum and palladium, and of course gold. That's an exception. But I think that part of it was a little bit more strategic. And that's something that we've certainly seen more and more in the last sort of year or so, or couple of years, is that there's been this ongoing push by different participants, and especially on the mining side, to have silver declared as a strategic metal by various governments, especially in the West. A lot of silver goes into military applications. We have almost no data on that. I don't think that's an accident. I think that those consumers for the military applications really prefer us not knowing how much silver gets consumed on that side of things. As far as silver being, some sort of a reserve asset, it's just not practical. And it's also a much, much smaller market. So there is a lot less silver available every year. If you look at the value of it versus gold, it just simply makes more sense to stockpile gold rather than silver for a central bank. I really don't think so. Although they stockpile gold, we have a hard time having central banks admit, so to speak, that they see gold as a reserve asset. They'll tell you things like, oh, it's tradition, it's this, it's that. But it's clear the way banking rules have changed globally. We've seen with banking rules, Basel III, I think, has shown that I think this year, in fact, it'll apply in the US, that gold will move from a tier 3 to a tier 1 asset. So it's going to be now considered on par with the safest treasuries, for example. That's a very big step. And I think we're going to start to see regular banks, actually, not just central banks, start to add gold to their balance sheets. To find arguments where we could see something similar happen to silver because of its volatility, because of its much smaller market, I would have a hard time envisioning that kind of scenario. I think it's probably somewhere in between, frankly. I do think that it's going to be a slow grind lower. You'll have your peaks and valleys, and you'll have some volatility. We've seen that quite a bit actually lately. US dollar index has moved where you get these moves of 3, 4, 5% in a matter of weeks or months, which is very atypical for a large global type currency. So the volatility certainly is there. But I do think that you're still going to have, over time, countries and large corporations and even smaller companies that trade with others being more than happy to settle in the dollar because it really has such tremendous liquidity and recognition. And it's so readily accepted all over the world. And you still have so many commodities priced in the dollar. So in that sense, I think the dollar's position will stay relatively dominant, but it will continue to kind of grind lower over time. When I look at charts of the US dollar index, for example, it peaked in the mid 80s. Around 125, 130. It peaked again around 2000, around 110. I think it's actually peaking right now somewhere close to 105, or recently peaked near 105. It dropped off to about 100 or so. We're right now back around 103. But I think, especially given, events of the last few days and weeks and months in the US, and if you look at history with Trump as president in his last mandate, this is exactly how it played out. The dollar peaked soon after he took office and then started to roll over and got weak. And he's very vocal about wanting a weaker dollar. And, that's good for him and his businesses. It also encourages U.S. exports because they become cheaper. So there are a lot of reasons why both Trump wants a weaker dollar and why I think sort of fundamentally it's heading that way anyways. And especially, like I say, events of recent weeks are just going to push the dollar lower. There was a really interesting chart that I saw a few months ago, and it showed the relative importance of different currencies, larger currencies worldwide. And that included, let's say the Swiss franc, obviously the US dollar, the pound, the UK pound, the Australian dollar, the Canadian dollar, the Japanese yen. It also included the euro, and it included gold. Well, what was interesting was, for the first time ever, gold has now surpassed the value of the euro as a reserve asset for central banks around the world. So that's also very telling. And in the last sort of 10 or 15 years where we've seen that gap close, we've also seen that the US dollar's role as a reserve currency on central banks' balance sheets has also started to shrink, where it was sort of in I believe it was maybe 15 or 20 years ago, it was mid to high 60%. Now we're just somewhere around the low 50%. So I think that's what we're going to see. We're going to see it continue to grind lower. And as we talked about, the world becoming more and more polarized, different areas are going to trade with each other, and they will find ways to avoid, having to transact in the dollar. I mean, I do think that's what we've seen happen to a fair extent. If you think of, the sanctions on Russia, for example, if you think of sanctions on Iran, for example, it's quite certain that area of the world has managed to get around issues with using dollars, for example, to settle trades and either outright bartering of commodities or simply using gold as a quiet sort of currency where they can just use that to settle trade payments and they don't need to worry about having to go through the banking system. That being said, I do think that we're going to see these blocks start to form and become more obvious over time. Many of your viewers probably know of the BRICS that are now expanding. As I say, I still think that we're a long way off from the dollar losing its sort of global dominance, but it is going to become less and less important over time. It's one thing for these countries to use gold, for example, to settle transactions, to settle trade when they're under pressure. But I do think that we're going to continue to see gold prices rise. And as the value of gold rises, I think we're also going to see countries and investors and average everyday consumers add to their gold holdings, to their stashes. Gold's going to take on more and more importance when it comes to it being viewed as a currency of some sort. It may be unofficial, but I do think it's going to be a larger and larger portion of people's portfolios.